what could you do with an extra 100 grand in your budget? What I'm going to talk about today, which I'm very excited about. I've been in the mortgage business since 2002, so it's a little over 20 years now. I'm going to talk about the all-in-one loan. Basically, it's a smarter way to borrow. The all-in-one loan is not just another mortgage. It's a solution to the mortgage itself. And a few of the benefits to it is you can actually pay the mortgage down faster. You're going to be able to save time and money. You will have 24/7 access to the equity in the mortgage, which you won't have in a standard mortgage, and be able to build some security into your life by using this mortgage product. I have done hundreds and hundreds of loans over that 20 years and have just been introduced to this product within the past couple of months. And I am shocked that I've never seen it. It is definitely a smarter way to borrow. Basically, it does a few things. It accelerates the pay down of principal. So it lowers the monthly and lifetime interest on the mortgage without changing your budget at all, which is so cool. You keep on just running your life just the way you were doing it before, but you're going to be using this new loan product and it's going to help pay off the mortgage faster. A lot of people are paying their mortgages off in 8 to 12 years. Some people in 3 years, depending on how much income you have coming into this product. So it provides, again, 24/7 access to home equity money without refinancing once it's in place. It's a 30-year loan. It's a 30-year home equity line of credit that you'll have access to the equity for the life of the loan. So what we need to do is we need to open up our minds to more than just interest rates, because a lot of people are going to right now have mortgages that are very, very low interest rates. And the interest rates on this are generally higher than what people have in the marketplace right now. But the fact that you pay it off so many years faster, it just saves tens of thousands. Some people are saving hundreds of thousands of dollars in interest over the life of the loan. Some of the features of the all-in-one loan, again, what I said, it's a first position home equity line of credit. And then basically what we're doing is we are connecting your bank account to the mortgage. It's all set up. You don't have to do any of this. You'll actually get a new bank account. That bank account, you'll have 24/7 ATM and Visa access. So you get a debit card with it, which is a Visa card, personal checks, online banking, mobile banking, and client services. So nothing changes as far as how you live your life and pay your bills and all that kind of stuff. But again, this is a principal first mortgage. And you'll see as I talk about it a little bit more, how principal is paid down faster because it's different than a standard 30-year fixed mortgage. And 90% of the people in this country that use a mortgage, some people have the ability to pay cash. I live in Naples, Florida, so 50% of the people buying houses around here use cash. But again, 90% of the people using a mortgage use a 30-year fixed mortgage. What we're doing, again, we're connecting the bank account, which is a checking account, to the mortgage. So checking accounts right now, they help us manage money. And generally, more money in 5 years is going to go through the typical checking account that is owed on a mortgage in 5-year period. It's amazing how much money we flow through our checking accounts. Money deposited in those accounts, and generally the way we're doing it now, isn't spent all at once for regular bills and expenses. So what happens is, as those deposits go in, it pays down the principal on the mortgage. And then nightly, the interest payments are actually figured out based on whatever the principal is at that time. Deposit goes in, pays down the principal. That night, you're going to be charging interest on whatever the principal is. So then we're paying out our bills as the month goes on. And basically, deposits in a checking account earn much lower interest than the interest that's being charged on a mortgage, even if you have a low interest rate mortgage right now. So basically, checking accounts have very little value outside of providing customers access to their own money. So what you will still have with this product. So idle money is used to lower the principal. Idle money that's just normally sitting in our checking account, sitting in a savings account, is automatically lowering the principal, which lowers the monthly interest payments. So that sweep banking is basically what's happening nightly. As the deposits go in, the money sweeps over at midnight, pays down that principal, which means lower interest payment for that day. And that is how we're paying off mortgages in 8 to 12 years. Now, this is what a standard mortgage looks like. And again, I have done hundreds of these. I am shocked that I've not seen this product, because if you look at the orange bars there, that's the interest on a typical mortgage. So typical mortgage is front end loaded with interest payments. So in that first 10 years, the 30-year fixed mortgage is designed to pay off 50% of that interest to the bank first in the first 10 years. And you can see the principal, how it slowly, gradually goes up And most of us are refinancing a mortgage in 5 to 7 years. We never even get out to that 20, 25 year range where all the principal is being paid quicker at the end. So money flows into the mortgage and cannot flow out on a standard mortgage. So one of the reasons why people don't like paying off their mortgages is because we can't get access to that money anymore. Paying it down, but then if a situation comes up, we can't go back and access it. With the all-in-one mortgage, we have 24/7 access to that equity as we need it. Here's an example of an all-in-one mortgage starting at $500,000. As you can see, it's a 30-year mortgage. For that first 10 years of the loan, you have full access to that $500,000 limit that was set in the beginning. After that 10th year, every month for the next 20 years, access to the equity slowly goes down. But as you can see, the principal's being paid down quicker. So then you have access to more equity. In this example, college tuition costs come up. You can pay for those college tuition costs, and then it's automatically going to be happening. But then it goes back to paying down that new balance, that new principal balance. And let's say after 10, 12 years, that mortgage is completely paid off. And then you would like to buy an investment property. Instead of having to go out and reborrow, take another mortgage, and figure out how you're going to purchase another property, you could write a check from this and basically paying cash for the next property with the equity in this home. So we bought a rental property. Now we're still paying on the loan, again, paying down the new principal balance that we built up in there. And now we're out 20 plus years. If medical expenses come up, same scenario over a 30-year period. In my opinion, this is just phenomenal mortgage product. So we have access to an interactive simulator. This mortgage is not for everybody. We have to make sure that it makes sense for anybody that's actually going to use the mortgage. So what you would do on this simulator, and I can give you access to this so that you could run these scenarios yourself, or I can do them with you. But basically, you're going to compare what you have now to what the all-in-one mortgage would do based on the amount of deposits that you have coming into your account, and then what your spending habits are, what your monthly spending habits normally are. And then you can see what it would be on a 30-year fixed mortgage. And in this scenario, they're paying it off in 9.2 years. I have a friend of mine that I was talking to about this based on his income, which is very good. In his scenario, instead of paying it off in the next 27 years, because he's got a 30-year fixed mortgage, he's already a few years into it, he would end up paying it off in the next 3 years, which him and his wife are very excited about. Anyway, we do have access to this simulator so we can figure out if it's a good fit for you. Again, it's for well-qualified people, credit score 700 plus, and you have to have positive cash flow. It's not a loan for someone who's living paycheck to paycheck. In closing, you can pay down your mortgage faster. You're going to be able to save time and money. You're still going to have 24/7 access to equity we cannot do with a standard mortgage. And then you're going to have peace of mind that if situations come up in your life, you'll be able to handle it. I believe you'll be able to sleep better at night having this wealth building tool. And it also gives you just a sense of security, give you warm fuzzies when you go to bed at night. Please contact me today so we can run the simulator together and potentially save you tens of thousands, possibly hundreds of thousands of dollars in interest. My name is John Hatch. My contact information is below. Look forward to talking with you.